Wall Street is clearly preparing to make a major push into the crypto space, with significant financial institutions setting their sights on the industry's big energy players, and XRP notably standing out in the process. This video will cover a lot of important developments, so sit back, relax, and welcome to the group. If you're new here, my name is Nick, and I hope by the end of this you'll feel inclined to subscribe. Let's start with what happened on the 21st. XRP futures were officially added to Coinbase's swaps list, a move that stirred a lot of excitement, with some claiming it would send XRP to new all-time highs. While much of that is typical hype around big news, what's truly significant is the broader shift we're witnessing in the market structure itself. Companies like Coinbase, Robinhood, and even the CME Group are now making deliberate moves into the crypto derivative space, a market that barely existed 12 to 24 months ago. It's incredibly encouraging to see this kind of infrastructure taking shape because it signals a deeper level of institutional interest and maturity within the sector. The involvement of traditional names like Robinhood and CME suggests that crypto is finally being taken seriously by established financial players. In addition to XRP, derivatives markets for assets like Hedera, HBAR, and Solana have also started to emerge on platforms like Coinbase, which speaks volumes about the growing demand for N10, utility-based crypto assets. What's also remarkable is the growing number of crypto-themed ETFs. 72 of them are currently awaiting SEC approval. This kind of momentum hasn't been seen since the early buzz around Bitcoin ETFs in 2020, with the first one being approved in 2021 as a futures-based product. Since then, the ETF conversation cooled down a bit but picked up again around 2023-2024. If we take a closer look at a list shared by Marty Party, we see XRP and Solana front and center, which is notable considering the list also includes coins like Dogecoin, Cardano, HBAR, Avalanche, Axelar, and Aptos. XRP and Solana, however, seem to be the key contenders. It's also great to see HBAR getting recognition, as assets with strong utility are becoming more vital in today's regulatory environment, especially with the increasing focus on AWS legislation. In my opinion, this influx of ETFs and institutional attention marks the return of Wall Street to the crypto table. We've seen some major declarations recently. Charles Schwab, CEO, who oversees $138 billion, announced plans to introduce spot trading for Bitcoin and other cryptocurrencies. With 37 million users and a massive presence in traditional finance, Schwab stepping into crypto is a huge signal. Even names like Morgan Stanley, JP Morgan, Citibank, and Bank of America are now involved in some capacity, which would have seemed impossible just a few years ago. The bridge between crypto and Wall Street isn't something that's being built anymore, it's already there, and traditional finance is crossing it daily. Citadel, for example, jumped into crypto without hesitation. Charles Schwab, the world's most traded financial company in December 2024, managed $1 trillion in client assets, had 5 million brokerage accounts, 44 million workplace retirement plan participants, and 2 million banking accounts. When names that large start offering crypto services, you know we've entered a new phase. On the same day Schwab made headlines, Deutsche Bank and other respected institutions also announced plans to expand crypto operations in the UWs. It's interesting to note that Standard Chartered, which invested in Ripple back in 2016, also backed Zodiac, a Ripple-linked crypto custody network, in 2023. At Ripple Swell, it was revealed that Zodiac was planning to add XRP to its platform. These developments make it clear, Wall Street isn't just exploring crypto anymore. It's here, fully engaged, and preparing to reshape the financial future with digital assets at the core. There's a noticeable shift happening right now as Wall Street and major financial institutions start making serious press moves into the crypto space, and it's happening in real time. It's almost as if the infrastructure, the bridge, was quietly built behind the scenes, and now these institutions are confidently crossing over, ready to pour resources and influence into the world of digital assets. They recognize the immense financial potential here and want to take charge of the landscape while it's still forming. As this trend continues, more participants from the retail sector are likely to flood into crypto, further accelerating growth. Over the next 5 years, The space is expected to become significantly more secure and regulated, making it even more attractive to traditional investors. What's especially telling is the increasing frequency of announcements around tokenization initiatives. New projects are emerging all the time, and industry experts are already speculating on how many trillions of dollars in assets could be tokenized by 2030 or 2033. A major turning point will likely come when institutional players and Wall Street intensify their involvement, but their approach might not match public expectations. Instead of dramatic disruptions, they'll gradually roll out crypto-based services and solutions, quietly transforming the space from within. One example of this transition is the growing involvement of legacy institutions like Deutsche Bank and Standard Chartered Bank in crypto and tokenization efforts. Their actions like Zodiac Custody joining Ripple's custody platform signal a broader alignment with blockchain technology. Deutsche Bank's own content platform, Flow, recently published a piece that read, almost like it was written by Ripple, highlighting ISO 20022 as a game-changing messaging standard capable of unlocking trapped liquidity, enhancing trade finance, and increasing operational efficiency. Ripple has been promoting these very benefits for years, making it striking to see such alignment. Even more compelling, the head of transaction banking at Standard Chartered emphasized how ISO 20022 could bridge traditional finance and decentralized finance, noting that it supports coins like XRP and USDC, naming only those two specifically. He pointed out that combining the messaging standard's rich data capabilities with new technologies could create the foundation for a powerful innovation system. This statement reinforces the idea that ISO 20022 isn't just a technical upgrade, but a key enabler of future financial infrastructure. These developments show that the institutions we once thought would resist crypto are now positioning themselves to lead it. They're not coming to take your crypto in a literal sense. They're going to build services and platforms that utilize the same assets and protocols retail investors have supported all along. The message is clear. The transformation is underway. The groundwork is in place, and platforms like Ripple and its custody services are at the center of the tokenization wave that's only going to grow.